All right, let's just jump right in. Welcome to this exclusive Polymer Bazaar explainer covering the HDPE, LLDPE, and LDPE markets for the first week of July 2026. Now, if you've been keeping an eye on the markets this week, you already know things are moving incredibly fast. The numbers are shifting, trends are flipping, and today we're going to break the whole shebang down for you. Think of this as your high-speed global financial news briefing, custom-built to help you navigate this rapidly changing polyethylene bazaar.
So here's the game plan for today's explainer. First up, we've got our global PE market roundup. Second, how to snag instant WhatsApp updates. Third, we'll dive into some crucial Indian market shifts and rates. And finally, we'll wrap it all up with our strategic purchase opinion. Let's get right to it.
Section 1. Global PE Market Roundup. Widespread Price Corrections.
Okay, so across the board, we're seeing this massive trend of weak demand globally. Over in Europe, buyers are literally just sitting on the sidelines. The subdued trading and incredibly thin volume dragged all HDPE grades down by a whopping €140 to €1,320 per metric ton. LLDPE C4 dropped to 1,300, C6 to 1,460, and metallocene hit 1,490. Even LDPE took a hit, slumping by 130 to settle at 1,350, mostly thanks to those high retail stocks. But honestly, the stagnation in Turkey is even more stark. There was absolutely zero demand improvement there, which forced a uniform $100 per metric ton plunge across all export offers. That brings HD film down to 1110, LL to 1140, and LD down to 1340.
Now, brace yourselves, because the severity of the plunge in the U.S. bazaar is just staggering. We're talking about a massive $175 drop. I mean, what happens when ample supply collides head-on with weak demand? Prices just plummet. Looking at a free alongside ship, or FAS Houston basis for export cargo, HDPE blow molding, injection molding, and film grades all absolutely collapsed by $175, landing at just $870 per metric ton. And LLDPE followed that exact same trajectory, dropping $175 across the board. That leaves butene at $850, hexene at $880, and metallocene at $935. Meanwhile, LDPE took a serious hit too, slipping $133 to land at $1,090 per metric ton as end product sales continue to struggle.
Let's pivot over to China, because they are facing a really unique dynamic right now. Off-season dullness is keeping their demand incredibly weak, but at the exact same time, supply is actually expected to climb as idled plants start firing back up. This tension is holding spot prices steady at 7,505 yuan per metric ton for HDPE, 8,700 for LDPE, and 6,800 for LLDPE. So it's this really delicate balancing act of dull demand versus rising supply.
Moving on to Section 2. Instant market updates on WhatsApp.
Look, trying to navigate all this global data can be totally chaotic, so we've got a little market hack for you. You can actually get the LLDPE weekly report, future trends, and price predictions delivered straight to your phone. It's an incredibly simple three-step process. Step 1, save the number. Step 2, open WhatsApp and just message the word LLDPE. And Step 3, our AI-powered chatbot will send you instant data sheets and updates in like 5 seconds. Super efficient.
So here's the exact number you need. Seriously, take a quick second and save this to your phone right now. +91 9374 624365. Having this AI chatbot in your contacts is an absolutely vital tool for your daily operations, especially in a fast-paced market like this one.
All right, Section 3, Indian market shifts and rates. Right now, current import offers for LLDPE July shipments are hovering right around $1,170 per metric ton CIFN Navasheva or Mundra. Also, something really important to note. Effective July 3, 2026, the Indian Customs Department revised their currency exchange rates. The new import rate is set at 95.20 rupees per dollar, and the export rate is at 93.50. You're definitely going to want to update your pricing models immediately to account for these shifting import costs. A moving rupee directly impacts your landed materials, so staying ahead of this specific rate is absolutely crucial. And this leads us to the absolute biggest local news of the week. Reliance Industries Limited, or RIL, has announced a major price revision, and guys, it is a significant slash. HDPE and LLDPE prices have been chopped by 10 rupees per kg. LDPE EC and injection molding grades are down by 6 rupees per kg, and all other LDPE grades are reduced by 3 rupees per kg. But listen up, because here is the most critical takeaway. Price protection on HDPE and LLDPE has been completely withdrawn.
No safety net. This means buyers now shoulder the full risk if prices drop any further after their purchase.
However, they did try to sweeten the deal a little bit. To incentivize buyers who might naturally be a bit hesitant amidst these broader price cuts and that withdrawn price protection, RIAL introduced an early bird discount. That discount is sitting at 2 rupees and 50 paise per kg. It's a pretty clear move to try and spark some momentum in what's been a very quiet market.
Which brings us to Section 4, our strategic purchase opinion. So, despite those early bird discount schemes we just talked about, the market remains awfully quiet out there. Traders are reporting pretty muted conditions, and converters are actively avoiding any excess raw material stock. So what's our definitive advice for you this week? We strongly suggest buyers continue to adhere to a strict need-based buying policy. Honestly, that's the safest play right now. Keep your stance cautious. And hey, by the way, if you want to dive deeper into the nuances behind this recommendation, you can grab the full PDF report at www.polymerbazaar.com/futures-trend/PE. Or, just reach out to our dedicated relationship manager directly at +91 931 38 24365 for any buying and selling leads. As we wrap up today's explainer, I want to leave you with this thought. If demand doesn't pick up during this promotional discount period, what happens next? Think about it. With global prices in freefall and local incentives seemingly failing to spark demand right now, are further ex-works price cuts from local producers inevitable? It's definitely a scenario you need to be prepared for. Anyway, thank you so much for joining me for this week's explainer. Make sure you subscribe, like, and share this with your industry colleagues so you don't miss next week's crucial update. Stay informed out there and stay ahead.